This is part one of our presentation related to the FASB codification for not-for-profit entities. The overall code that explains what a not-for-profit entity is ASC 9581020, and it states that a not-for-profit entity is one that poses characteristics distinguishing it from a business entity, such as contributions of significant amounts of resources from resource providers who will not receive anything in return. Also, they will have an operating purpose other than to provide goods and services at a profit. Also, there will always be an absence of ownership interests. Business entities that will never be considered not-for-profit are those that are investor-owned, as well as those that provide dividends or other economic benefits to their owners or other members. The first codification that we dug into was related to the presentation of the financial statements. This is ASC 9582005. The financial statements of not-for-profits are significantly different than those for your typical business entity. So, information that a not-for-profit's financial statements include is services that are provided by the entity, as well as their ability to continue those services. Also, it will include information related to their assets, liabilities, net assets, and much more. Also, the way that their financial statements differ from a typical business entity is that rather than the typical balance sheet, they have a statement of financial position, and rather than the typical income statement, they will have the statement of activities, and then they will have the statement of cash flows also. So for purposes of their financial statements, their net assets will always be classified as either net assets with donor restrictions or net assets without donor restrictions. And donor restrictions are stipulations that were put in place by the donor, stating how the not-for-profit must use those contributions. Disclosures that are related to the presentation of the financial statements are that they must include information related to the entity's endowment funds, also the ratio of fundraising expenses to amounts raised and computation of that ratio, and that they also must disclose whether the endowment funds are donor restricted or board designated. The next code that we researched was income statement reporting comprehensive income, which of course, like I mentioned, for a not-for-profit entity is statement of activities, and this is ASC 95820. The primary purpose of this statement is to provide information related to the effect of the entity's transactions on their net assets, the relationship of those transactions to each other, and how the entity used its resources to provide its programs and services. Also, of course, the income statement will include revenues, expenses, gains, losses, and their reclassification of net assets, if they had any. ASC 9522045 is the subtopic other presentation matters related to the income statement, and it states that the entity must expand on their change in net assets with and without donor restrictions, and that revenues will be reported as increases in net assets, and that contributions will be defined as revenue when contributions are related to ongoing or central activities, and contributions that are peripheral or incidental to the not-for-profit will be considered gains. Expenses will be reported as decreases in net assets, except for investment expenses, which will be netted against investment income. Disclosures related to the income statement of a not-for-profit are that they must disclose their operations or items that are excluded from operations. Also, they must disclose internal board designations, appropriations, and that must be on the face of the financial statements. Otherwise, they must provide a description by type of actions. So the next two codes that we researched were revenue and expenses, and both of these topics relate to the statement of activities. So revenue recognition is ASC 958605, and general revenue for a not-for-profit is defined as inflows or other enhancements of assets or settlements of liabilities resulting from the entity's operations that have been reported on their statement of activities. Contributions are typically a not-for-profit's primary source of revenue, and they will include cash or other assets, promises to give, as well as reductions of liabilities. Subtopic 25, recognition, states that the not-for-profit will recognize revenues or gains in the period received, as well as, like I mentioned, transactions related to ongoing major activities will be classified as revenue, while those that are incidental to the not-for-profit will be classified as gains. Disclosures related to revenue recognition. Activities that any contribution was used for must be disclosed, and they must also disclose any amount that was recognized as revenue. They also must disclose their assets that were transferred by the not-for-profit to a recipient entity, and they must disclose the identity of the recipient, whether variance power was granted, amounts to be distributed, and the amount that was recognized in the statement of activities for the transfer. So the last code that we researched was other expenses, ASC 958720. Subtopic 45, other presentation matters, states that a not-for-profit must provide information on the statement of activities that describes each expense's functional classification. So functional classification may be program services or it may be supporting activities. Supporting activities can be further broken down into such categories such as management and general activities, fundraising activities, or member development activities. Also, the not-for-profit must explain the relationship between the functional classification and the expenses natural classification, which could be, for example, salaries or rent, and they must also disaggregate these classifications. Subtopic 25, recognition, states that expenses related to fundraising activities or events should be expensed as incurred at the time the services have been received. So the disclosures related to expenses, this is kind of redundant to what I just said related to disclosing the relationship between functional and natural expense classifications, and disaggregating the functional expenses from their natural expenses. So if that information was already not disclosed in the not-for-profit statement of activities, then that is when they will need to disclose it in the notes to the financial statements.